Hi everyone, I am Rajesh. I am the product lead of Badla.io. Badla.io or the Badla Protocol is a way to do trustless lending, borrowing, hedging, and speculation in ERC20 tokens. We would like to take you guys through a quick PPT which talks about our project and then take you through a quick demo of our MVP, which is currently on the Kovan Test Net. So, what problem do we solve? We at Badla are believers in the concept of tokenization and in the ERC20 token standard, which is the leading token standard today. Yet, financial sophistication in the ERC20 ecosystem is Badla.io is inspired by my background in trading over the counter or OTC financial products. It is inspired by repo agreements, which are a standard over the counter financial instrument used by large players globally, and the Badla system. The Badla system was an over the counter system used for margin trading and short selling in South Asian stock markets for decades. It's currently defunct because of certain issues like transparency and collateral management and counterparty risks that were present in the system. A lot of these issues are being solved by the use of smart assets and smart contracts. The Badla Protocol is a set of smart contracts for repo and reverse repo agreements in ERC20 token pairs. Now, what a change that we have bought in from the traditional offline repo is that in Badla, one set of tokens, as represented by token B in this diagram, are always held in the contract. The other set of tokens are not held in the contract, and the counterparty who has access to them can do anything that they want with them during the time of the repo. We're going to take you guys through two situations here. One is a classic repo situation and the other is a classic reverse repo situation. Let's look at case A first. We assume a token pair called VETH ERCX, and we assume that the current market price of VETH ERCX is 2000. That is essentially, one VETH is equal to 2000 ERCX tokens. Now, there are two players here. Alice runs a token hedge fund. She's bearish on the price of ERCX over the next 15 to 20 days, and she would like to short sell ERCX, but she doesn't have access to that ERCX. On the other hand, we have Bob here, who's going to act as the banker. He runs a token venture fund and holds a significant quantity of ERCX, and he's looking to generate returns on his ERCX holdings. Bob acts as a banker and he proposes a repo on the VETH ERCX token pair. Over 30 days, volume of 10 VETH, first leg price of 1600 and second leg price of 1620. Now Bob creates this proposal by loading it with 16,000 ERCX and sends the proposal details to Alice. Alice accepts the proposal by sending 10 VETH to the contract. The contract releases the 16,000 ERCX to Alice, holds the 10 VETH in safe custody and goes live for the next 30 days. Now here we have two situations that could happen. Situation 1 is after 30 days, Alice pays back 16,200 ERCX to the contract. The contract releases her 10 VETH back. After 30 days, the second situation is that after 30 days, Alice does not pay back the 16,200 ERCX. In this case, Bob can claim default and access the 10 VETH that is being held in the smart contract. Here you can see a quick look at the cash flow during the repo. We see the excess 200 ERCX that is left at the end of the repo is the return that Bob gets. And from Alice's perspective, she gets access to the 16,000 ERCX token to sell short in the market. On the other side, we have the payoffs of both Alice and Bob. The above demo showed that Bob was exposed to unlimited losses, similar to that of an option seller. Badla.io implements a force settle system wherein the banker can force a settlement while the repo agreement is still live. Let us look at how the force settle works during our next demo. Let's examine another case for our demo, which actually would show us ways that the force settlement works. Here we have two players. Alex is, we have two actors in this demo. Alex runs a token venture fund. He has ERCX and is worried about it going below his buy price, but he believes in the token for the long term. He would like to hedge his downside for a period of 30 days. On the other side, we have Betty. She is a treasury manager at the ERCX company, and she's been tasked with preventing the price of ERCX from falling further. ERCX as a company is also willing to use their VET balances in order to help, in order to offer hedging solutions to clients and as an alternative to selling. The current market price again of VET ERCX is 2000. Here Betty acts as a banker and proposes a reverse repo with the first leg price is 2500 and the second leg price is 2450 in the VET ERCX token pair over 30 days. Volume of 10 VET. She also wants to do a trigger and the trigger value is above 2450. Now Betty creates the proposal, loads it to 10 VET and sends the details to Alex. Alex accepts the proposal by sending 25,000 ERCX to the contract. Now, after 30 days, we have two situations that could happen again. One is that either Alex pays back and the contract releases money to Betty. If Alex does not pay back, Betty can claim default and access the 25,000 ERCX. But another thing that is possible is within the time that the repo is live, if prices move against Betty, she can request for a forced settlement. So the cash flow is pretty much as seen in the previous example. The player payoff is as seen in the previous example. But here in the case of Betty's payoff as a banker, we can see that the dashed green line allows her to maintain a specific return regardless of where the token price might fluctuate. Our minimum viable product is currently running on the Kovan Test Network. It has been there since the beginning of March 2018. By the June of 2018, we expect to have an alpha on the Kovan Test Network. We expect to have a beta on the mainnet by the September of 2018. As mentioned earlier, we are strong believers in the ERC20 ecosystem. The token ecosystem will be powered by certain decentralized dApps which allow for various decentralized operations on and related to these tokens. Badla aims to be one amongst them. Thank you.